Well, g'day there, traders and friends, market participants and enthusiasts right around the world. You are here with James on behalf of Pivot Point Trading as I bring you this market recap dated October 1st, 2016. Another eventful week in the markets, a very volatile week it has been. Upwards and downs, we started the week at least quite bearishly, pretty decent bearish sell-off, however quickly negated on Tuesday's candle. Let me just zoom in and show you some of the price action as we drill down into the daily candlesticks. Again on Wednesday, we tried to get some commitment to the upside. It failed. Thursday, we saw, again, another brief, intimate sell-off, quickly reversing on Friday. But the net gain overall week to date has been very minimal. If I change to the weekly chart for you, you can see here on the Dow Jones Industrial Average, it was a positive week. We did close up 46 points, but again, in the scheme of things, given where we are currently trading at 18,300, give or take points, it was a very minor move or very non-eventful material move in an overall committed direction. These markets across the board remain bifurcated, they remain confused. Market participants, whether it's traders or investors, are somewhat hesitant to gravitate towards, aggressively bullish trades up and around these all-time highs. Having said that, though, any of the bears out there who have been selectively shorting at key periods have had to unwind those shorts either at targets or very close to, if in fact the market has pushed on up over those initial short locations. The markets currently at the moment are going through and always will continue, but more so at the current juncture are having a very aggressive battle, all right, between the buyers and sellers. And at this current time, neither side has really gained the upper hand. Since breaking out, and I'll go back to the daily chart and show you this. Since breaking out in the month of July on the Dow Jones Industrial Average, we did see a continuation to the upside. However, it only lasted for maybe 2 to 3 weeks. We did peter out around 18,600 points. Since this particular date on the Dow Jones Industrial Average, the markets have been doing, in many ways the sidestep. They've been moving sideways in a very confined range. They have been technically range bound. We haven't been trending. We've gone through a multiple series of sort of short-term consolidational patterns, whether you want to call them sort of double tops which have set up and failed to break the neckline, or whether you want to call them short-term wedges. All in all, they are consolidational patterns. We are still holding in a bullish type of conformational setting. And what I mean by that is if I zoom on out, and this is still the daily chart of the Dow Jones Industrial Average, this level above 18,000, we have failed to break above it really through the entirety of 2014 and 2015. It has been a level in green on my screen here on my chart, which we have found resistance at and reversed on a plethora, multiple occasions. You can see here, I'm just sort of highlighting some of the points until again, we came across that breakout in the month of July. Since that breakout, again, the market's doing the sidestep, but we are technically holding what was once old resistance. So I'll try and color coordinate this, red being resistance, as potentially new support. Now, this is a bullish type of setup, all right? However, we are neutral. We are remaining flexible, and we're only allocating capital once the markets themselves really commit one direction or another. Now, those directions on my screen, or those sort of directional indicators on my screen, is 17,970 on the Dow Jones Industrial Average. That would be a breakdown of that macro resistance turned support, and most recently structural support throughout the month of September. If price confirms and closes below that level, we are going to see an intermediate pullback, a correctional move back into the long-term primary trend of the Dow Jones Industrial Average. Now, if I go out to the weekly chart, you can see this for yourself. I'm going back to the beginning of 2009. I'll change to a line chart for you so you can see this. This is the beginning of the bull market, the end of the GFC. You've got the first fan line, the second, third line, the third decelerating fan line, and what we are working with very rarely is that fourth fan line in effect. Now, that trend, Well, the macro trend assumes itself to be in effect. We do not have any definitive signals according to Dow theory that it has reversed, but if we do break that macro support, we are looking at the markets pulling back in a controlled manner back to either retest the primary trend line, which is that fourth decelerating fan line, or to see it come back down into the vicinity of around 17,500. That will not essentially mark the beginning of a bear market. We will have to look at obviously what is going on at critical pivot points if in fact we see the breakdown, but again, that is pure speculation, right? It hasn't happened yet. Price has not confirmed. On the flip side of that, or counter to that, we can look at, of course, the bullish outcome. And on the Dow Jones Industrial Average, although again we have been moving sideways in some form of a consolidation, whether it is distribution or not, time will tell. But if we can start to push on up above 18,504, we should see a little bit of follow through into the Dow Jones Industrial Average. Now, I want to make one thing very clear. Generally, what we want to look for when markets are at all-time highs, again, is confirmation of similar movements. We want to see, obviously, the S&P doing the same thing to the Dow and the Dow doing the same thing to the Nasdaq. We want to see markets in agreement. That is simply not true. So the Dow Jones at the current juncture, again, as at the close on Friday, it is still yet to push above these two peaks, just above 18,600. Now, although that isn't bearish nor bullish, it is what it is. We are simply moving sideways, consolidating. That is why we are neutral. That is why we are flexible. The S&P 500, a similar type of setup. You can see that we are sort of at the midway point between this upper bracket and this lower bracket. Still yet to confirm either a breakout or a breakdown. Now, again, take the Dow Jones and the S&P 500 to be the same. They are not, all right, or they do not agree with the Nasdaq. That is more or less at its all-time high. Sure, it's a couple of points off from that, but it certainly is leading the other two markets. According to, again, the exponential moving average, we have a bullish arrangement or alignment of the moving average trio, which is showing us, or at least alerting us, that we are technically in a bullish trend. So the Nasdaq is the healthiest of the three markets. The Dow Jones is moving sideways. You can see the exponentials are moving flat. They are horizontal, indicating that there is no trend to the current market. And the S&P 500, you can see the same thing again. So you can see how the breakdown between the Dow, the S&P, and the Nasdaq, or how the breakdown is sort of setting up, or at least the current divergence between these three markets. Now, one interesting chart, and this is going to round out this week's or this weekend's market update, is that if I bring up the Dow Jones Transportational Average, you can see for yourself that the transports have been leading the industrials for quite some time. Whether it has been, the bull market up to the top around 9,250 or 9,300 on the Dow Jones Transportational Average, it turned down prior to the industrials peaking out in late 2014, following into the beginning of 2015. It has turned down again prior to the industrials. It has also made the breakdown leading into 2016 prior to the industrials doing it early January 2016. Having said that, it turned up early in, or at least mid-January, whereas the industrials turned up mid-February. So the transportational average is in many ways a leading indicator to where the industrial average is probably going to go. Oftentimes, when there is divergence between the transportational average and the industrial average, they will inevitably converge. They will come back together at some point. Oftentimes, it isn't all that, or it doesn't take all that long until they converge. Now, what is interesting to note is that although there is a rather large divergence between the industrial average and the transportational average, being that the industrial average is very close to the all-time high, the transportational average is still a long way away from its highs, which it put in late 2015, early 2016, late 2014 to early 2015 up here, just shy or just over 9,200. What is interesting to note is that although that divergence still holds, it still remains, we're finding some interesting patterns on the transportational average, which may be the impetus to push the industrial average up out of this current range-bound type of consolidational pattern that we're currently in. As you can see, the transports have been moving sideways. I'll change back to the candlestick chart, and we've got four peaks that we've been looking at since February, March 2016. they're the 4, and we're currently at a 5th. We've actually just closed above the peak in early September, but we're yet to break above the peak in April 2016. We are at what we call a pivot point, at an inflection point. If the transportational average overcomes this level, it closes and it follows through above 8,177. Again, this is probably going to be the impetus, which is going to drive the industrials higher. And again, the transportationals will eventually converge with the industrials. Given that we should be neutral at a pivot point, all right, it can break bullish or bearish at this resistance level. If it turns down, we're looking for a close below 7,612, which still hasn't happened, or it hasn't eventuated since July, but may very well still occur moving forward. So the transportational average is giving us a very interesting signal, or at least where it lies on the chart moving forward, which, you know, it's in your best interest to keep a close eye on in terms of, well, where's the transportational average moving? Because oftentimes it will, you know, show the way or lead the industrials, which is what market participants should be, you know, rallying for, or at least championing, given that the Nasdaq is up at these levels, but the Dow and the S&P simply aren't. They have been, but they're not at the moment, or as at the close on Friday. So again, thanks a lot for watching this market update. Markets are confused. It's sometimes best to not do a whole lot. I mean, oftentimes it is, if you're not a really, you know, skilled or experienced trader, it's best to sit on your hands until the market reveals to you which direction the trend wants to move in terms of the intermediate and also the primary direction. Very, very important. You know, to use an analogy of sorts, it's like the tide or the stream of a river, or the ocean current. It's easy to go in the direction of the stream, of the current, or in that wind direction if you're setting sail, as opposed to moving against it. Once the tide of the market sets up, i.e. breaks above certain macro pivot points or below certain macro pivot points, a lot of individual stocks encompassed within those indices are going to move in that direction, right? It's just helped by the tide of the market. So, you know, it's something to think about. It will help you out moving forward. But at the moment, it's, you know, you'll be sitting down for hours on end trying to understand, or at least formulate, come to, you know, a definitive answer as to which direction these markets are set to move from this current location, because simply no one knows at this point. And again, market participants are confused, sentiments mixed. And, you know, there's no overwhelming direction, or at least the battle between buyers and sellers simply hasn't been won, right? It's still going on. It's still continuing. And it has been continuing since that July breakout, which has since fizzled. The CCI, which I pay attention to, the Commodity Channel Index, it should be showing us health. And what I mean by that is it should be posting above positive 100. It's simply not doing that. So that is a big warning signal. The Commodity Channel Index, let me just bring it up for you. On the Dow Jones Industrial Average, you can see here it broke below that positive 100 soon after that macro breakout. So that is a big warning signal that this could be a flaky breakout. However, having said that, it seems as though nothing can turn this market around from putting in higher highs, whether you like it or not, whether it makes sense or not. Markets can remain, as they say, irrational more than or longer than you can remain solvent. Always keep risk and money management principles at the forefront when looking at trades or when assessing markets. But we do have some major cautionary signals outside of the CCI across the board. Again, this is the S&P 500, and also divergence on the MACD, the moving average convergence divergence. What its primary use is divergence, and we've got it not only on the daily time frame, but on the weekly time frame and on the monthly time frame as well, which is such a rarity in financial markets. You know, also given, of course, that it is the ETF, or at least the index itself, where these divergent signals are showing up on the MACD. So, you know, mixed markets, and that's why we're seeing these big up days followed by big net down days, followed by, again, most of those losses given back, or at least made back the following day, or to be lost again in the next trading session. So, you know, if you're sitting there pulling your hair out trying to assess these markets or understand these markets, you have to understand the markets in context of what is going on. Very, very important, and a big key in unlocking at least technical analysis, or at least the application of analysis at critical points. Pivot points are incredible, especially macro pivot points. It will set the tone of where the market direction is leading, but it just takes some time to sort of shake through, rattle enough people before direction is set. And at that point, that's what's going on now. Direction will be decided soon. Hasn't happened yet. And when that direction is decided, we'll jump on board with the trend continuation or either the trend reversal from these levels. All the best traders and friends right around the world. You are here again with James on behalf of Pivot Point Trading. Enjoy your weekend. I'll be back with you next week for some more market updates. All the best, everyone. Goodbye.